Welcome to Decentralized News, where we report on the major events affecting the crypto economy. I'm your host, Piter, joined as always by Aussie. Let's get right into our educational and entertaining content that is not financial advice. Bitcoin up about 3%. We're sitting here on Monday afternoon now, to kick off the week after basically doing nothing all weekend, hanging out just above 60,000. So far, no real big regulatory FUD to start out the week. No big movements. So we're building off of positive news that came out late last week over the weekend that we're going to jump right into.
Yeah, I think there is definitely some positive news in the space this coming week, and I think that will be hopefully reflected in the price. We'll see what happens.
The first big story to me was, I don't know if it's a pivot, but a more clear positive stance from Donald Trump on crypto. Did you see this clip of him?
I haven't seen the clip, but I have seen the news about him pivoting, or at least I'd say it's less of a pivot and more of a solidifying his stance and clarifying his stance, which I think is positive for anyone that's in crypto.
He met with a group of his NFT buyers on his day off from trial. So interesting that the trial that's been keeping him off. The trial's been keeping him off the trail. It's interesting that this is one of the few things that he has done. But he said that he'll ensure cryptocurrency can be used for campaign donations. That was a big one. And he said, this is the quote, "If you can't, I'll make sure you can." Trump said, "Can we donate to the Trump campaign using crypto?" I believe the answer is yes. It's still not even like super clear, but either way, it was we're going to take crypto donations. And okay, he made these remarks to a gathering, like a meet and greet, meet and dine, buyers of his mugshot edition NFT. So if you owned more than 47 or 47, right around there, you could go to this thing. But then there was this guy who asked a question. He answered, he's like, "Yeah, guy with the goggles on." But in response to a question about whether he would keep crypto business in the U.S., Trump said that he'll work to retain them in the country. Quote, "If crypto is moving out of the U.S. because of hostility towards crypto, we'll stop it. We don't want that. If we're going to embrace it, we have to let them be here." He also made a comment, President Joe Biden doesn't even know what crypto is. If you like crypto in any form, and it comes in a lot of different forms, if you're in favor of crypto, you better vote for Trump. Bullish. If there was also some polls that came out that showed him with a pretty big margin in most of the swing states. In this battle of being the winner, who benefits most from the RFK's independent votes? Because he's been the most pro-crypto. Trump's been in the middle, looks more pro-crypto than Biden. And the Democrats in general are just been the more anti-crypto party.
Yeah.
There's just no doubt about that. So if you're was a Democrat before, so if you're just trying to win that, who he's going to take votes from, and if you're a single issue voter with crypto, and Trump is perceived as more likely to win, and you don't want to throw away your vote, and this is your one issue, it could help him win that battle.
It could. I think it could. Some swing voters who might sit on the fence but are pro crypto might just solidify them not voting for RFK and voting for Trump. And so I think this is
going to improve that ratio, right? And there's no doubt about that. Whatever the ratio was before, there was more that were willing to cast their vote or consider RFK Jr.
Oh, that's for sure. I think there was a lot of people that were considering RFK as stance just because he was most pro crypto, and this clarification from Trump, I think, puts him not quite in line with RFK, because RFK has a better understanding of crypto, and
he's made comments about the right for you to have it and hold it yourself, self-custody it, and just interact with the system. Trump hasn't made comments like that. I would certainly like to see it.
Yeah, that's it. So we haven't seen the same level of comments, but this is definitely more bullish filings from Trump and statements from Trump than what we've seen previously. So I think if you're big on crypto and that's your single issue, then I think he's definitely trying to make a case for himself right now.
And also interesting just to watch this election cycle play out and how much more prominent crypto and Bitcoin is playing a role in this election. It's a real role as opposed to the last one where it's really still on the margins.
Absolutely. And we'll see how that continues to evolve heading into September and November and the real election season.
In a really broad stroke, just that is bullish, just the level of discussion going on now compared to the previous cycle.
It's
and just
definitely,
taking it back and watching the growth of the network.
yeah, it's definitely more prominent in lawmakers' minds, in the general public's mind, in everybody's mind. And I don't think that's any more displayed than in the next slew of stories that we've got, which talk about a lot of filings with the SEC. We'll go through this list and then we'll summarize it a little bit and discuss it. But JP Morgan has bought $625,000 worth of Bitcoin just 2 weeks after their CEO called it a fraud. And he's saying that it does nothing. I don't care. It's a pet rock and I would close it down.
Yeah, so many positive comments from JP Morgan.
Yeah. The insurance giant Mass Mutual has reported exposure to Bitcoin ETFs in their 13F filings. We've also got Wells Fargo, the third largest bank in the US, reporting owning some spot Bitcoin ETFs in SEC filings as well. Bracebridge Capital, which is Boston-based, has reported owning $1 million of Bitcoin through ETFs. Rubric Capital has reported 60 million, and Symmetry Investments has reported 3 million. There are some of the biggest holders as well.
Yeah, they were the biggest holders, and then that Bracebridge Capital, just to give some context in terms of these investment firms.
Yeah, individual holders of the ETFs. Bracebridge now taking a very sizable lead.
They went bananas, dude.
Yeah.
This was a story earlier in the week, 53 million, 60 million. Whoa. And then this one's 433. So yeah, some big players coming into the space right now.
Yeah, looking at some other players, a little bit smaller, about half the size of Rubric and Symmetry, but CTC Alternative Strategies has reported about 27.7 million in BlackRock spot ETF holdings, making it the second largest holding in its portfolio. That's pretty bullish news. They went pretty big on Bitcoin, although Alternative Strategies would suggest that they are into alternative investments. Investment banker William Blair has reported Bitcoin ETF exposures per SEC filings. And then Susquehanna International Group makes a massive Bitcoin ETF investment according to the firm's filings with the SEC, revealing $1.8 billion across various Bitcoin ETFs. And the 13F filing for Hightower Advisors, which is a $130 billion wealth manager, reveals they hold over 68 million in Bitcoin ETF shares. This is just some of the biggest headlines in private holdings of the Bitcoin spot ETFs and Bitcoin, but over 186 wealth managers have reported owning Bitcoin ETFs this week in SEC filings. So that's absolutely massive, with BlackRock obviously being the largest of the ETFs being reported in these filings. We've also got a couple of more with the Bank of Montreal, which is a US and Canadian bank, disclosing spot ETF holdings, and the Switzerland's biggest bank, UBS, saying that they also own BlackRock spot ETF.
And this one I just saw a tweet, Canadian Imperial Bank of Commerce.
Yeah, CIBC.
See, they have 7.2 million, so not a huge exposure, but exposure nonetheless. So it's that's another Canadian bank. So seeing all these banks with exposure, it just makes me think of that DTCC story about the 100% haircut, and how banks, just makes me think of fractional reserve banking. I just see all these banks and how maybe that's a positive for the space in general, that they can't leverage these things and do crazy shenanigans with them.
Potentially. I think this is
more for like the bank holdings, not necessarily the investment.
I think it's good, probably from a bank holdings perspective. You're probably right, just because with the DTCC haircut rule, a bank can't leverage these Bitcoin positions, which means that if there was ever a run on the bank, there was no leverage associated with that Bitcoin spot ETF. So when they dump it, they only have to sell enough to cover what they're holding, not a leveraged position, and which could put them in the red and cause them to go bankrupt. Like we've seen several banks go bankrupt in the US in the last year and a half. So
that's an interesting point you bring up. What happens if one of these banks that holds ETFs goes bankrupt? What happens to the ETFs?
they would have to liquidate the assets, or they would be to.
But you could get it back at a loss.
Yeah, I mean, they could sell it at a loss. So that's
not your keys, not your coins.
yeah. Oh yeah, with the ETFs, if you're buying it through your bank, which I don't in Canada right now, I don't know of any banks allowing you to buy the ETFs through them. You can only get them through third-party brokers, but generally your accounts are just transferred to another bank, sometimes at a loss, sometimes not. It depends on what the bank sells for and how bad in the red they were when they went under.
Luckily, I've never had any personal experience with that. Another little bit of private news or positive news: private jet charter service Candy Jets. They now take Bitcoin Lightning payments, so you can get your
private jet for Bitcoin
private
Lightning.
jet fly around when you're ready. So with all this bank news on ETF holdings, it got me thinking of that CoinGecko list we're looking at, public companies with Bitcoin holdings. Because in amongst all this, there was this other story about Japanese public company MetaPlanet. They bought an additional 19.87, but they also released like a white paper about how they're going to try to use Bitcoin, but as a corporate treasury asset. It reminded me of MicroStrategy, what they were talking about, but they cite the need to hedge against, and they're going to use self-custody so they can deploy all possible capital market instruments to take advantage of their holdings. So I thought this was interesting. And then when I looked at that CoinGecko list, I thought, it was in the 20s, maybe, I think it's 25 or 23. I don't remember. I thought it was going to be double or triple. There's 28 companies. Now, this company wasn't on it, so maybe it's not totally updated, but I was surprised that this hasn't seen a significant growth, like starting to see a double and triple.
Yeah, I think the thing is that this is, I think, only companies that hold Bitcoin as spot Bitcoin rather than as the ETFs. And so I think this is a list that I think we can maybe, there needs to be a separate list that starts getting made tracking ETF holders, since we have access to that data through the 13F filings. I think that would be something interesting to track as well, to see how the lists compare and see how they grow.
We're cruising past the halving. We're chopping sideways down. Bitcoin mining difficulty has dropped because of that. One of the stories has been just the hash rate going up and to the right. It's just been really consistent. So this is the first little step back. But following the recent halving reward, fees have significantly just decreased. Bitcoin miners are contending also with fluctuations in the market value. We've been choppy down since the halving. So coupled with the reduced fees and lower rewards, the hash price or cost per petahash per second per day has declined to around $48 as the hash price continues to drop. Profitability diminishes, which has a significant factor in reducing overall hash power. But this does lead, Bitcoin kind of has this natural, it also sets the difficulty. So the difficulty will come down. It already came down once. I think it's every 10 days. I'm not 100% sure.
It's about every 10 days. And so it's already down 5.62%. So that's the largest decrease that we've seen in quite a while.
Yeah, the stories since the beginning of the year has just been up, everything going up, difficulty going up, hash all-time highs. We're seeing a little bit of a drawback, but it should be expected a little bit with fees coming down. There was like a big boon in the beginning with the whole Ruins protocol and stuff like that with fees, but that's calmed down.
Yeah, a lot of companies that are mining are just on the brink of profitability at these prices, and they're gonna have to start turning off some miners just to maybe keep their operations going. This is apparently the most significant difficulty retarget since December of 2022. So
yeah, we're expecting another one in the next 10 days or whenever that is. I'm not sure.
So I think this is pretty interesting to watch. It's not unexpected though. Like we've got to keep this in mind. This isn't unexpected, but something worth watching. I think what will happen is you could, if the price keeps dropping, you'll see the hash rate keep dropping, and at one point there'll be so much less competition that these miners will be able to hold some of their Bitcoin again. And that's when you'll really start seeing the price come back up, because right now they've, for the most part, a lot of them just have to sell everything that they mine just to keep the doors open and keep the miners running. It'll be worth watching how that evolves in the next few weeks.
Let's shift into Ethereum a little bit. We still got the ETH spot ETF
10
coming up in a
days.
couple of weeks. 10 days, a little less than. So that's coming up. We're seeing a little bit of activity there.
Yeah, a little bit of activity. ARK Invest and 21 Shares have both cut the staking component from their latest spot ETF filings. This is a little bit disappointing for myself and for others who saw this as another evolution of the ETF game. However, this is something that kind of, because of how the language was, makes sense that they maybe had to withdraw it. In both of their ETF proposals, they said that the sponsor may, from time to time, stake a portion of the trust's assets through one or more trusted staking providers. And that was removed on Friday. We're still 10 days away, and a lot of people are wondering around whether or not the documents that were originally submitted were essentially copy and pastes of the Bitcoin ETFs, and so maybe there wasn't as much to be fixed. Eric Balkunas, for example, has says, while it may seem like this is getting their docs in shape based on SEC comments, which would be good news, there hasn't really been any comments. So it's either a Hail Mary or maybe trying to give the SEC one less thing to use in their rejection. Eric Balkunas has said he's not sure yet. And this is a fair point. The fact that we haven't really had comments and we're 10 days away from the first deadline day, it's not a great sign.
Yeah, but another take, or the other side of the argument, is they don't need much revision because they've been through this already with the Bitcoin ETF process, and you still have BlackRock's record, only one loss on their applications, and so while the odds have now become lower, it may present an opportunity for those willing to take on more risk. You know what I mean?
Yeah, we'll see what happens. I definitely agree. The pulling of the staking component, especially,
it seems like a denial is more priced in, basically.
Yeah. Oh, especially considering what we saw on the ETH prices, especially of late, but just through this entire drop, they've taken quite the pounding, down over 30% at one point. I think that wouldn't be out of the question that most of this denial is priced in, and any sign or closeness of an approval or a rejection that doesn't look like it'll hold water might be very bullish for the Ethereum price in the next little while. That being said, there are other pressures on the Ethereum price right now, and that's the fact that ETH has become inflationary for over a month as fees hit an all-time low.
Yeah, I think this is an important story just because it touches on one of their main narratives, the ultrasound money narrative, and like a common argument for I don't want to say ETH maxis or whatever, but people who are, bullish on the network.
Yeah, we've seen a growth in the amount of Ethereum on the market since their move from proof of work to proof of stake. This has moved from becoming a decrease to an increase again. The amount of ETH on the market currently is about 120,105,358 ETH, which still represents over 415,000 ETH less on the market since the merge. But
Right.
We've seen, but we have seen approximately just shy of 40,000 new ETH enter circulation in
the last 30 days. Yeah.
In the last 30 days. That's not great, but I think this is something that you've got to balance, because we did have the decon upgrade not that long ago within these last 30 days. And when you look at the decon upgrade, that was leading to a massive decrease in fees. From layer 2s, even on the main network, we've seen a decrease in fees. And when you have essentially something that's aimed at making everything cheaper, it's achieved that. And therefore, because activity hasn't ramped up tremendously since that upgrade, you are going to be losing money, essentially, which is what's happening with Ethereum. They're losing money because their supply is inflating. So I think that's a bit of a trade-off of considering the decrease in fees, you are going to make less money. And it's making Ethereum much more usable, though. Like, I can do transactions for $7, $15, which is, considering the fact that we were looking at $100 to $150 fees over a month ago, just over a month ago. This is nuts. And
lowest on record, five GUI.
Yeah, so I think that's in some ways a lot of people complain about ETH's gas fees as a reason to use Solana. The fact that Decon has brought the GUI down this low, I think should be seen as a positive thing. Even though, yes, the fact that it's inflationary right now because activity picked up to meet these lower prices isn't that big of a deal.
And to put in a little bit of context, it's inflationary, but it's at about 0.5% annualized. And just to put it in context, before the merge, it was at 3.75% inflation, and Bitcoin is now at about a 1% inflation rate. So, yeah, is it ultrasound money? Only time will tell. This concept for Ethereum will be, retained in the world dominated by these layer 2s and layer 3s, like you said.
Yeah, I think really you've got to expect these type of things. We're still not in a full-on bull market. We've just had the halving. So
yeah, the halving, we're retesting the bull market support band. We're getting down towards it. We're trending towards it. It seems like choppy down. We'll see if we can hold a line there if it really breaks down.
Yeah, and so to me, that just shows that there's still plenty of activity to go on. And I think one thing that was happening was just about a month ago, there was a lot of tier 1 airdrops that everyone was pushing for as well, and a lot of people were thinking, oh, this is coming soon, and so they were pushing activity, and that's quieted down a little bit, and so there is a little bit less pressure on the Ethereum chain as a whole, and I think you've seen that across most blockchains. We haven't heard a story of Solana going down for the last 30 days, and I think that partially has to do with the fact that airdrops and those users are a little bit quieter right now.
Dude, let's jump into macro. Macro has some really fascinating stories this week. The Fed just, they finished. He spoke this last week, right? Like Tuesday, Wednesday.
Yeah.
Yeah, like the markets in the middle of the week were volatile, still pretty choppy, volatile nonetheless. But there's been a couple interesting stories. We'll talk about what's coming up with the Fed and everything. But M2, the money supply has started to increase. And this is the rule that I read. It's like simple rule: liquidity leads risk assets. So once the money supplies starts to increase, it's just a bullish sign for risk assets. So it's just barely up, but it's been trending that way and is now positive. So we'll see. And the other kind of big story, even more interesting, because that one's a little obscure. Start getting into
you get into really big money rules and how that impacts markets, but I think something that we've just talked about a lot ourselves and in some of the massive groups that we are in, that is money supply plays a massive part in how the market behaves if you analyze it over a long enough time frame. And so I think this liquidity definitely will make a difference. And I don't think it maybe shows in the next few months, but will definitely show this year.
Yeah, we'll see if the trend continues, because it's, while just barely positive, it's been trending this way. So if it continues to grow and increase its growth. But yeah, the other really interesting macro story that came out this week was a G10 country, one of the richer countries in the world, Switzerland, had a rate cut. So it was considered a surprise rate cut, but they did talk about how, we got inflation under control. It's below 2%, so we're good. So they have like their own reasoning, but it's maybe a sign of the near future. But they raised their rates.
No, they cut their rates.
I'm sorry, excuse me. Yes, cut their rates. Pardon me.
Yeah, no, that was big. Looking at other news, especially considering that the Swiss National Bank made this decision months ahead of anyone else really in the globe that's expected to make a move. Canada, I think, is expected sometime this summer, but basically because policymakers are trying to prevent gains in the Swiss franc. And so that is an interesting move by Switzerland, and we'll see if anyone else tries to follows that decision making. I wouldn't be surprised if Canada makes a similar decision in the next month or two as more economic fears start hitting Canada. But for the US, there's a bunch of data to watch this week. By the time this episode's out, we'll have PPI and we'll have CPI on Wednesday. Thursday also has the import price index this week, which are all expected to tick up. So this is interesting to watch. We'll see what PPI and CPI do. PPI is expected to tick up to about 0.3%, which is up 0.1 from the 0.2 last month. And then core PPI is expected to remain the same. I'm definitely interested in how core PPI performs than regular PPI, but definitely worth watching. CPI is expected to tick up to 0.4%, up from 0.3, but it's still expected to tick down on a year-over-year basis to 3.4, down from 3.5. Core CPI is expected to tick down, and that would be a welcome sign, ticking down from 0.4 to 0.3%, and a year-over-year number of 3.6 instead of 3.8. So an improvement. Core CPI in particular has been something that a lot of people have been very afraid about, as it's been remaining quite sticky over the last several months.
We've got 5 more Federal Reserve meetings, 5 more chances for them to pivot this year. We got June, July, then September, November, and December. And that's when you start to see kind of market participants starting to expect something. But 50% expect a rate cut by September, which is, that number's been trending down. It used to be 60, it was 70 before. So that's going lower and lower and continue to. We'll see. But 90% are still expecting 1, if not 2, with 50% thinking there'll be 2 by the end of the year. So there's only 5 meetings left for them to get that done.
Yeah. Some people say that this expectation leads to it happening sooner than expected, just as market participants get more cautious with their money, which then causes issues within the market. But we will see what happens, especially over the summer. I definitely don't think we'll see June or July, but September, a cut in September, I would say isn't totally out of the books. And I think market participants are also keeping their eye on that date.
Keep a close eye on macros in general, because I tend to agree with the theory that, or the possibility, the hypothesis, I'm watching it because it's not like there's a huge track record, but that altcoins just perform when they're going to perform. It's in a rate cutting or rates at the bottom environment. That's when they really flourish. Not that I don't invest in altcoins from time to time, but yeah, I thought I mentioned that as we pivot into the speed run.
Yeah, I think altcoins will continue to be something to watch. I definitely think with the money supply potentially continuing to tick up and
looser monetary policy.
And looser monetary policy, I think we could see some really good things with the altcoins. AI altcoins are already having a pretty good relief rally after dumping pretty hard. Not to put it lightly, they dumped pretty hard with the rest of the alts. They are rebounding.
There'll be a narrative that wins, but it always seems like there's the current narrative with the most FOMO, and that's like AI. It could be DePIN, it could be real world assets next week, could be GameFi the week after that or the month after that. They tend to hop around. There'll be a dominant one, and it could be AI for sure.
Yeah.
But yeah, it would be interesting to watch how it plays out.
Oh, definitely be interesting to see how it plays out. Talking about DePIN and kind of DeFi, ARB is releasing a securitized program, which is backed by BlackRock, which submitted a
proposal. Yeah, it's a proposal.
Yeah.
This got people hyped up a little bit.
Yeah, it's a proposal, but to deploy
that BlackRock Buildle thing. Sorry.
Yeah, so this is in partnership with BlackRock, which is aiming to deploy tokenized securities on Arbitrum. So that
real world assets. I just had to interrupt you again. I'm sorry.
Yeah, real world assets. Lots of kind of big buzzy words here.
But it's all hype right now. There's nothing like they want to work with BlackRock. Okay, sure you do.
Yeah, that's it. That being said, Injective and ARB are also looking at working together with Injective launching its own L3 using the Arbitrum Orbit toolkit. So that's going to be
And this
pretty
goes back to
interesting.
the Ethereum story because it really does depend on the overall growth of Ethereum. If it can just grow and support all of these things, then it's got a chance. It doesn't matter how low the fees are, they'll be making enough of it.
This is another interesting feature that is coming out. MetaMask is rolling out a new feature called Smart Transactions, which next week will help users avoid MEV bots by allowing users to submit transactions to a virtual mempool before being sent on chain. MEV bots, if you don't know what they are, essentially that aim to make really fast transactions by front running other people's transactions in order to make money. They can be used for arbitrage. They can be used for a whole bunch of different things. And they can be a problem, especially in high gas fee environments, I would imagine, but also something like Base, where meme coins or Solana, where meme coins and getting in super early is crazy important. Having a MEV bot can sometimes, or also known sometimes as a sniping bot, can allow people to get in earlier and front run other things, but these smart transactions will help you avoid being front run, hopefully. And then we've now also got EigenLayer opening their claim window, and Osmosis, which is the largest Cosmos DEX, they're announcing that they're going to launch a Bitcoin L2. So taking interoperability, which is a stalmark of the Cosmos ecosystem and Osmosis, to another level, bringing it to Bitcoin as well with L2.
All right, that's the show. Thanks for joining us. Please consider liking and subscribing, sharing with a friend. We appreciate it more. This is not financial advice. Please do your own research. Educational and entertainment purposes only, and we'll see you all next week. Thanks very much for joining us.
Thanks for joining us.